Hey, it's the Crypto Sniper. How are you doing? Glad to be with you. Okay, so whilst Bitcoin is not continuing down at any greater rate and is showing some signs of possible bottoming, more on that in a bit, you often get a situation where select alts that have not yet had a chance to run or early stage running have a bit of good news coming out or whatever the case, making some progress, and they could set up pops to the upside. This is typical of bull markets. In other words, provided Bitcoin is not dying hard, these particular projects that are gaining some momentum could have a run. So I'm going to cover one such that were traded by our community, still in the trade, a community find in terms of actually locating the opportunity. And in fact, on top of that, there's another one that is setting up, which our community is watching. And should you wish to know, you can jump in. So the token we'll be covering today that has broken and is making some progress and where we think it will go is Chiliz. Yes, that's right. So Chiliz, it is described as the fan token, and it's launched its own layer 1 compatible blockchain, etc., etc. Fans, this has got to do with all sorts of sporting related things. Guys that are football fans will be interested to know that Paris Saint-Germain and Napoli, Manchester City, Barcelona, and I think Turkish teams have already been signed up. They claim to have 150 plus global sports partners, an ecosystem of 2 million users, etc., etc. That's all the fundamentals. Go to their website to know more. But it's a fan token. In other words, it's an opportunity for people that support particular sports teams to get involved. Now, how sustainable or how great it will be remains to be seen. But we were triggered long on an opportunity, and a number of the community, quite a high number, are engaged in that potentially. As I say, a community find. And we'll go over the technical structure of that in a moment. Before I do that, though, I'm going to start with Bitcoin. Because, as I said, a key aspect of any technical trading is to make sure that Bitcoin's not doing anything negative that could affect an alt's ability to perform. Because if the God market gets angry, then the whole table shakes. Okay, let's have a look. So this is Bitcoin without any annotations. As I say, you were grinding into eventual highs. We spoke a lot about the 47.5 being the eventual line. I'm going to put all the annotations back on in a second. But there's a sign that you've had a couple of slams of 3 sells, typical. So you got your primary sell after the rejection there. You got a wind up. You got your second sell, part 1, and then you got another very, very low vol after a little bit of sketchiness. That's kind of more of a flag, and then the third sell. You tend to get these 3 waves of sell, pause, sell, pause, and sell. So it's actually a 5 structure. It's a little bit Elliott like often, and you can get a localized low. Does that mean that's a low? We don't know. It could be. Or it could be a respite for a while. So let's just turn all the annotations and give you that context again. So that was our 47.5. You had 3 opportunities on wick onlys. We're on a 12-hour, not even a daily, by the way. We did this chart for you last time when we were talking about voids and vacuums in the volume by price across a particular piece of price behavior, where most people just put it on the right-hand side and sweep it right across the entire chart. You want a selected area. Since you stop going up beyond a certain rate, capturing this level. Anyway, you can learn more about that. You know what to do. So that was a break of the bagel. And sometimes you get a return move. It could get back up to here, resist, and pull down. Now I want to take you just into what's going on here for a small bit on a lower time frame, because you've seen that chart before. And this is kind of how it looks. Let's go even lower. So we want around a 30 minutes. And you'll see that actually, in this, our Top Gun and instructors and community leaders were spotting in Bitcoin, and it's now transpired an upside HVF structure on a lower time frame. And that's how you start recoveries. Small little setups on lower time frames, and there it goes, there it goes, there it goes, pop, and then you get an impulsive move. And we had a target for this. So this is actually not even a non-bad environment. It's actually mildly bullish on the lower time frames after quite a lengthy correction. Don't forget, you could have sold at 47.5, could have bought back at probably not much more than 38. So you're talking about $10,000 What was that low there? 38. Whoops, I'm moving the chart in the wrong direction. Come back. So around 38 it looks like. So around $10,000, just under. You could have saved yourself losses in terms of that. Now you wouldn't have sold you could have actually sold the 49 by the way, but it's unlikely you get that. That's why the 47.5 is great guidance, and you wouldn't have bought the absolute bottom. So you could have saved it, even moderate execution, you could save yourself 7,000 if this turns out to be the localized low and we're now in a rebuild move back up, but that's it's still got quite a bit to do. So let's just draw that one for you again, utilizing the tool will show you technically how it shows up, and there it goes. And actually I'm going to take that one, my guys know why, and you're coming quite close up to making that. Now the interesting thing is, if that's the low, it's also the first setup in a new trend we'd expect overperformance. So that means normally we would only do partial closes here and expect overperformance. So what could happen? Let's go back to the bigger time frame, maybe take it down to a 4 hourly. Let's do 4 hourly. So what could happen on here, and let's do that, is that you could start a process where you work your way back up, and you maybe get somewhere that could even be what I'd call a relative low 2. So that would be your high, or your final high, roughly there at the 49, and you start a leg down, and then you have and you end up with again another wind up continuation pattern where the volatility calms down and you get a squeeze, and it sets up the next leg up. Remember, macro is bull. Nothing ever changed about this correction. We did just say it's going to be a localized high. It might be a good point to get more defensive, and then you'll get plenty of opportunity to reload for the bull lower down. That was the message. It was not a bear call, but people don't understand that. They're very binary, light on, light off, everything else shades of gray. Anyway, so that, yeah, pretty interesting. Whoops, one of our flags are there. Let's take it off. So that's Bitcoin. So what's going on with this other token that we're talking about? Well, that is Chiliz, and we got it on a 4 hour. Let's take it down to a 2. So we were watching this after it was brought to our attention by a community member. Well done to him. And it had very good structure. First up and up here, and then down there. Second, and then a more calm, and we expected this line to break for it to put in a low 3. It's what we're actually saying in trade leaders as we've been watching it now for a bit from here. And then beautiful triggering event. You could have bought anywhere actually in the funnel. On this impulsive candle, I would have said any points in entry. And then you're looking at around 12.6. And again, the interesting part about this, so we're starting straight with the pattern. Normally we go big time frames down. The macro dominates. Go with the macro and the big time frame down. So I'm going to now do it kind of the wrong way around. But let's give you this token over here on a far larger time frame. So it was founded in 2018. I don't know if it's listed then. I think it only listed there in terms of this particular exchange, Binance, in and around September 19. So what you actually have here is a long period of wind down during the bear into what I'd describe as a falling wedge with a splitter. And then you've gone up, you've hung about at your splitter, you've done a flag on the splitter, and then you've done a little push and you're breaking up for the upside. So falling wedge, generally bullish, continuation pattern. You see how these things can move if they decide to get moving. So you were 209 and you ended up, looks like not much off $1. So 209 means you weren't even 1 cent. So 1 cent would be 101. And then you ended up, as I say, probably just under $1.90 something. So that's a 90x at that moment. So there certainly was appetite for that. 94 cents. And if you get the low just before the run started, the low was actually 208.76. So yeah, that's over 100x given you're starting at under a cent. So it's pretty interesting when those things happen. Does that mean it would do 100x this time? I certainly don't necessarily assume as so. It's obviously starting off from a higher point, but you would imagine it should have a shot if we have a proper bull market, and if the project is deemed to be one that will survive and actually flourish and will get all the football teams and the Super League of football, and then, you know, you're going to have everything, NFL, Miami Dolphins, you know, the whole shooting match, all sports, all codes, fans for everything, you would eventually expect it to be quite optimistic. So that particular structure setup that is literally in here right now, it's quite significant because it's breaking that falling wedge. Let's use a different color. There's another way you could have drawn the wedge. You don't have to always have the apex there. Sometimes there's other points that make more sense, and that would be one. So what I sometimes do with wedges is you determine all the key lows in advance. I've already drawn the lines. So you'd mark the lows that should make up part of the construct, roughly there. I generally do what I call wick trimming on these things. You would have do the same over there, and this then sets the gradient for your lines generally. Ideally if you get 2, 3 or more, but those two are clearly localized highs that are pushed the most to the upside and to the right, and those are the lows that are most to the downside and to the left. And if you understand that, then you can also then draw your falling wedge. So best to just draw the lines, join them up, and then you can just continue that through those points. So that'd probably be the most accurate, and as I call it, wick trimming is the name of the game, and that one goes through there. So once you've done the points, you do that. Then you can extend at the same angle and gradient, and that's how you tend to get your best outcome. So it's not a super tight squeeze if you're including those two top ones and along the lows here. I might have slightly undered the lower side if I were to do that again. Didn't nail it first time up, but I would probably say there and there. Those are your key ones, and so that's more like that, and that gives you that function there. So there's a couple of ways, as I say, for the best draw of your falling wedge. That's how it works. Anyway, so there is another similar moderate to medium-sized market cap that the community is looking at that's in a very similar situation pre-break to Chiliz. If you want to know more, you know what to do. Thanks for watching the video, and we'll catch you next time. Bye for now.